All right, you guys are welcome to today's video. So in today's video, guys, we're going to be talking about MT5 stop loss and take profit tutorial for forex trading beginners, right? So guys, in case you don't know how to properly place stop losses, or your stop losses have always been hit anytime you place it, or you don't know how to place your take profit properly, and you don't even know the kind of how many, and you don't even know how many stop losses type there is, because actually there are different kinds of stop losses and how you can actually implement them. Okay, that is what I'm going to be teaching you guys in this video. So I want you guys to pay attention, and you want to take your pen or paper to be able to write down some information I'm going to be giving out, guys, for free. I'm going to be giving out in this video. So the number one thing you need to do, first of all, I'm sure by now, so guys, I want to believe by now you already know how to get your broker. You already signed up to a broker, you already have your login details, and you've already logged into your MT5 account, and you've already downloaded your MT5 and logged in. You've already done all of that. Okay, if you don't know how to do that, this video, I already did a video about it before, so I'm going to leave it in the link. So guys, in this tutorial, guys, I just want to show you guys how to properly place stop loss, what is stop loss, how to use stop loss, and the different kind of stop losses and take profit you can take in the market, right? So right now, as you can see, this is XAU USD, okay? And how you can add this if you don't have it on your MT5 is just to click on quotes. If you go to your quotes, now this is where you see different pairs that you can trade. Okay, you can either add or remove any of these pairs, right? If you want to remove some of the pairs, you just click on this pen right there. Okay, and then you can just tick on any, click on delete first. If you click on delete, then you just want to select the pairs you don't want to trade. And it's good that any pairs you're not trading, you don't leave it on your code, so that you don't even make mistake and go and maybe click them one day or like that, you get. And if you want to add any new pairs, you just go to plus. This is available in all MT5. Once you click on plus, you're going to be seeing the pairs are available for whatever broker you are signed up to. Okay, now the broker I'm using right now have volatility indices, crash and boom indices, step indices, and all of that. But some of your brokers might not have it, right? So most brokers will have forex majors and forex minors. Okay, so if you come to forex majors, those are pairs that have like AUD, USD, Euro USD, and all of that. I'm sure some of you might know about that by now. Okay, this is where you can come and select and add any other pair you want to add to your trading quotes, right? So right now we are going to be going to use our XAUSD, which is good to make the kind of description I'm going to be giving you guys today. So for example, there are different kinds of stop loss, guys. Actually, there are three main type of stop losses. Okay, there is the equity based stop loss or the balance based stop loss, right? And two, there is the live or active stop loss, and three, there is the automatic stop loss, right? So guys, what are the different uses for these stop losses? And as a beginner trader, which stop loss is most advisable for you to use? Okay, I'm going to be telling you that as we proceed in this video. Now, the number one stop loss is called the equity based or balance based stop loss. Now, some of you actually use this stop loss without knowing. And for this equity based or balance based stop loss, some of you guys already use it without even knowing what you are using, right? Now, how does this equity based or balance based stop loss works? It simply means that you enter a trade, okay, and then you don't take it, you don't do anything. Instead, that the trade goes into profit or it takes out the remaining money in your account. That is equity based or balance based stop loss. It might also called as blow account. Some of you call it blowing off account, and there are different names for it. Okay, but that is actually equity based or balance based stop loss. Some of you already do that without even knowing. That is, if you are not using any stop loss, what it means is that we are using your balance, the balance on your account, as your stop loss. That is what it means. That's what you are telling the forex market. So that is why it's important you always use stop loss. What stop loss does is that if you use any of the two stop losses I'm going to be talking about, what it does is that it helps you preserve your funds. Okay, it helps you preserve your funds. But there are some people that actually use this equity based stop loss and they're successful, right? It's a strategy something that some people use to battle their psychology. Now, how does it work? You as a beginner, I'm not going to advise you to use this balance, this part of stop loss. Okay, now, but how does this stop loss work? It's very simple, guys. For example, how you to use it like a pro. If you did want to use the balance based stop loss like a pro, this is how you use it, right? For example, if you have $1,000 that you want to trade, right? That $1,000 you have it to trade as your forex account. What you will do is that you will not deposit that $1,000. You can only take out the percentage that you are willing to risk at a particular trade. For example, if you are willing to risk like 10% or 5%, okay, you take out that 10% from the $1,000 that you have in your account saved somewhere else. You deposit that into your broker, okay, and once you deposit $100 into your broker and then you execute a trade in the market, you will leave the trade. It's either the trade goes into your profits or it takes out your balance. Now, once the balance is taken out, you will not feel any pain because you only risk the amount you are willing to lose. You didn't deposit all your account. So this is how you can use the equity-based stop loss, right? So if, for example, you have $1,000 and you already deposited that $1,000 as all your trading capital, then equity-based stop loss is not for you guys. I'm not going to advise you guys to use it, right? Even though some people actually use it, but it's not advisable for a beginner trader. All right. Now, there is the second kind of stop loss, right? The second kind of stop loss is called live or active stop losses. Okay, now how does that work? The live stop loss is like, for example, if somebody enters a trade right now, okay, if you enter, let me say I enter a buy right here. For you to enter a trade, actually all you need to do, let me just show you how to enter a trade on your MT5. Okay, you need to click on this red bar right here. Now, if you click on it, it's going to bring out your buy or sell. And then what you have here is your lot size. Okay, now you can either reduce the lot size or increase the lot size. Now, depending on your amount and the distance of where you expect your stop loss to be, that is what will determine the lot size you are going to use. I don't know if you understand what I'm saying. Now, you don't just go into the market with any lot size. Like this 5 lot size now is quite huge. Now, this is a mini lot size, okay? If you're using a small account, you go for a micro lot size like 0.01, right? If you go for 0.1, this is a huge lot size. Now, this is a topic on their own. As a beginner, I'll just advise you stick to 0.01 until you understand how lot sizes work. Then you can start increasing them. Okay, for your first trade, whatever money you have in your account, it's okay to use 0.01. Okay, as time goes on, you will now learn the right lot size to use, because lot size can actually blow your account. If I go ahead and put a standard lot size on a small account, that account will be blown without even knowing. Okay, so guys, now the second level of the kind of stop loss, which is called live or active stop loss, how do you engage it? Okay, for example, if I click a buy right here right now, let me say I click a buy right here. Okay, like this market is currently trending up and I want to buy this market. Okay, now if I intend to use the live or active stop loss, and probably I decide that this is the region I want my stop loss to be. Okay, now if you click on your entry, it will bring out close SL. It will bring out this prompt. Okay, this prompt you can use either to close the trade, to use your SL or stop or TP. Okay, but we're going to be using our SL, which is stop loss. Now this bar is the bar you can decide whatever you want your stop loss to be. For example, you can decide your stop loss to be here, or you can decide your stop loss to be here or to be here. But if you are using the live or active stop loss, what this means is that you are not going to place any stop loss. You are just going to be monitoring the market. Okay, you already know where if your market goes to, you are going to close out. That means you are going to be sitting on your screen. You are not going anywhere. You're not going to leave your market. You're not going to leave the forex market for anything. You're just going to be watching it. Okay, and if the market comes to the region that you no longer want, maybe you have lost so much money that you feel, okay, this is where you want to exit. Once the market gets to that place, you exit manually. Okay, you don't allow the market to take you out. Reason some people use this strategy because they feel it's better for them, because a lot of time stop losses will go to your stop loss. The market will go to your stop loss for going to your take profit. So some people feel that instead of them to just place a stop loss and when they come back, it's why the market have taken them out and later going to take profit, they decide to engage this active stop loss or live stop loss. But is it encouraging for a new beginner? No, it is not encouraging. Any new beginner should not be practicing this kind of trading. It's actually very dangerous. It is actually dangerous for a newbie to engage in, because a lot of time volatility can come into the market, and the market will go to a place you don't even expect, and by then you'll have lost a whole lot of money. So it's best you use the next stop loss I'm going to be talking about, which is the automatic stop loss. Right now, this automatic stop loss actually means that whenever you enter a market, you go ahead and put your stop loss where it should be. And now, where should you actually put your stop loss to know that this stop loss, if this market takes me out at this place, then I'm sure that the market is no longer going my direction, right? The best place to put your stop loss is to follow the market structure, or the previous high or the previous low. Okay, whatever the market is moving, it's always giving you a higher high. Let me show you guys what I'm talking about. Now, as you can see, this is looking like a bullish market structure. You have your highs here, you have your higher low, you have your higher high right here. Okay, and then you have your higher lows. Okay, right? So, and this is another higher low. As you can see, the market is probably going to give us another higher highs. Okay, but what you can do as a trader that want to take advantage of this move, once you have entered, like right here, right now, just where you see it, okay, your stop loss must come below the last higher lows. Okay, you put your SL just like I've taught you before, right? This is your SL. Okay, now as you can see, this is where your stop loss should be. At least you should give gap a little. This is your previous higher lows. Okay, and this is where your stop loss to be. Okay, now as you can see, the stop loss is already indicating the amount you are going to be losing if the market comes to this direction. Okay, with this particular loss side of mini loss side, if the market comes to this place, I'm going to be losing $20. Okay, so now how do you set it? After you've done this, you click on this arrow right here. Okay, once you click on it, just click on modify, right? And then it is done. As you can see right now, there's a line right there. Now this is your SL. Whenever the market comes to this level, the market would automatically take you out. Now this is how you should trade as a beginner. You should always have a predetermined amount you are willing to risk for every trade you enter, right? So that if the trade goes in your favor, fine. If it doesn't go in your favor, you already know what you're going to lose, right? So even with if you do this right now, you can actually leave the market and go do whatever you're doing, okay? And later you come and check if you are in profit or you are in a loss. So this is how you place proper stop loss. If the market ever takes you out from this level, you know that the market has violated the structure, the bullish structure. It is now probably going to go down. So for that reason, you do not enter a trade for now, right? You wait and watch till the market gives you a new kind of structure, probably a bearish structure, for you to sell. Okay, now that is how it works. That is how you place a proper stop loss. Now, how do you calculate your take profit? Now, if you want to take profit, you need to also check out the structure of this market. Okay, as you can see right here, there is a high, right? There is a higher low, and there is a lower high, and this a lower low. Okay, and there is another lower high, another lower low right here, and this a lower high, and this a lower low. Okay, so what you can do here is you can select any of this structure, because there's always a liquidity lying at every higher, this and lower high. So guys, because there is always liquidity lying above every lower high or lower low, or higher high or higher low, there's always a liquidity around there. Now, whenever the market comes around those areas, there are very high possibility that the market might turn around. Okay, so what you do is you have your take profit, right? Your first take profit somewhere around here, second take profit somewhere around here, and third take profit somewhere around here. Now you can have these three level take profits, or you can just target 1:2, right? Or 1:1. Make sure that whenever you're taking your profit should be at least ×2 of your risk. Your profit should be at least 2x of your risk. If you're risking $100, you should be able to make nothing less than $200, right? So your total account balance should be $300 by the end of the trade, or at least $150, which makes it $250 by the end of the trade. So you should always ensure that your profit is at least more than what you risk. Okay, it should not be below, but that it should not be below what you risk. Okay, now this is how you take profit, and then this is how you step your stop loss. Now, the same way that you entered a trade and place your stop loss below the previous higher low. Okay, if it is a sell, you do the same thing, like this selling structure right here, right now. Let's say if we have entered a trade right here, okay, our stop loss shall come below. If we enter a sell trade right here, maybe if we saw this sell, okay, and then we took it somewhere around here, right, our stop loss should come above this lower high right there. Okay, so guys, this is how you properly place your stop loss or take profit using your MT5 account after you must have done your analysis. Okay, so guys, I hope this have given you guys a lot of value. Don't forget to like our videos and then support this channel by subscribing. I'm going to see you guys on our next tutorial. Okay, bye for now.